Let's get right to it. We need to talk about a pretty uncomfortable truth when it comes to the Indian markets. This isn't just an opinion, it's a reality that's backed by some serious data. And, really getting this could completely change how you approach everything from here on out. So, SEBI, which is India's main market regulator, did this huge study. They looked at lakhs and lakhs of regular market participants. And what they found, well, it's pretty uncomfortable. This is the jumping off point for everything we're going to cover today. And just to put this all into context, over the last few days in this series, we've kind of laid the groundwork, right? We've talked about how markets work, who the different players are, the whole risk versus reward thing, costs, and of course, behavior. But today we look at what actually happens in the real world.
And here it is, the big revelation. Most people, when they lose money in the market, it's not because they're unlucky. Not at all. They lose because of how they're participating. And I really want to be clear on this. This is not just a conversation about traders. This applies to pretty much everyone. We're talking investors, traders, even people who just invest in mutual funds.
Yeah, the pattern is just the same across the board. It's incredibly consistent. For most retail participants, that's folks like you and me, the way they engage with the market, it actually destroys their wealth. Let that sink in for a second.
All right, so let's get into the specifics. What does the data actually show that leads to such a harsh conclusion?
Okay, first up, people who invest directly in stocks. The data is pretty clear here. Most of them actually underperform the Nifty over time. And we're not talking about a small margin. They just don't beat the basic market average.
And there's the whole idea of being active, frequent buying and selling. It turns out the more you do it, the worse your returns get. It's a direct link. It's funny because activity feels productive, right? Like you're doing something. But in the market, it's often just destructive.
And hey, this isn't just about picking your own stocks. What about mutual funds? Well, even there, most of the active funds, the ones with these so-called expert managers, they also underperform over the long run.
And last but not least, trying to time the market. That dream of jumping in at the perfect bottom and selling at the absolute top, well, it usually leads to much worse results than if you had just stayed invested the whole time.
So you take all these things together, underperforming the Nifty, buying and selling too much, trying to time things. And what do you get? You realize this is not a trading problem. It's a behavior problem. It's not the market that's the issue. It's how we act in the market.
Now, if you want to see this behavior problem on steroids, just look at F&O, futures and options. It's basically the most extreme version of this whole thing. It's like a magnifying glass for all these issues.
SEBI found that something like 93% of individual F&O traders lost money. I mean, think about that. More than 9 out of every 10 people who get into it end up losing. The numbers don't lie.
But here's the really wild part. Even with those terrible odds, the number of people jumping into F&O trading grew by over 300% between 2019 and 2023. So almost everyone is losing, but more and more people keep showing up to play. It's a total paradox.
And that really gets to the heart of it. F&O doesn't create the problem. All it does is expose the existing problem, but way, way faster. It's the same bad habits, just supercharged.
So, why? Why does this pattern exist everywhere? It's definitely not about being smart or not. It comes down to 3 core reasons, a mix of how the market is set up and, you guessed it, human behavior.
Okay, reason number 1, the information gap. You're basically competing with massive institutions that have whole armies of people doing this full-time with the best tech. Second, there's cost drag. Every single time you buy or sell, there's a cost. It might seem small, but all those fees and taxes, they just eat away at your returns. It's like a constant leak. And third, the big one, our own behavior. People just can't help it. We get greedy when things are going up, we panic when they fall, we enter late, and we exit early.
And that behavioral pattern alone is enough to destroy your returns. It all points to one powerful idea. Most people are not losing to the market. They are losing to themselves. Your biggest opponent is the person in the mirror.
Wow. Okay, so after hearing all of that, it would be really easy to just feel completely discouraged, right? So what's the takeaway here? I mean, does this all just mean you should avoid the markets altogether? Is that the lesson?
Absolutely not. No. In fact, that is completely the wrong takeaway. See, the problem is not participation. The real problem is participation without a framework.
That's the key. Just jumping in without a plan, without a process, that's what creates these terrible statistics. And that is exactly why we're building this framework here, piece by piece, understanding risk, knowing the players, managing costs, and controlling our own behavior.
So the big question is, how do you make sure you don't become just another one of those statistics? How do you avoid the trap? Well, there is a path forward.
You have to really truly get this one core truth about the market. The market transfers money from those without an edge to those who have one. It's not personal. It's just a mechanism. It's designed to move money from people acting on impulse to people who have a plan.
And honestly, this should feel empowering. Your goal isn't to beat everyone. You don't need some secret sauce. You just need to not behave like the majority. That's it. So, let me ask you this, and be honest. Did you know about all this before today? Does seeing this change how you think about your own investing or trading? From tomorrow, we're going to go even deeper into how markets actually behave in real time. Because once you understand behavior, you stop reacting blindly. And that changes everything.